Well, United States crushing 50% tariff on some Indian goods have kicked in. Those tariffs are the highest in Asia as President Trump pressed ahead with the levies to punish New Delhi for buying Russian oil. The new tariffs will double the existing 25% duty on Indian exports that took effect on August 27th. After years of nurturing closer economic and security links, India and the US now find themselves at odds over Trump's trade war. The sky-high rate leaves India facing a likely slump in trade with its largest export market. The tariffs cast a doubt on Prime Minister Narendra Modi's plans to turn the South Asian country into a big manufacturing powerhouse. Higher US tariffs puts India's export competitiveness at a risk compared to competitors like Vietnam and China. Worries have increased over a trade deal as a US trade delegation, which was earlier planned to visit India for discussions from August 25th till 29th, they have now postponed their trip. India is looking to move away from the US and deepen partnership with other countries, including the BRICS bloc. Prime Minister Modi is set to meet the Chinese President Xi Jinping next week during a security summit in China. This will be his first visit to China in 7 years, and it is a part of a larger effort by Beijing and New Delhi to mend ties that had fallen amid severe border clashes in 2020. Separately, Russia and India have vowed to expand trade from $50 billion to $100 billion over the next 5 years. Certain key exports such as textiles, footwear, and gems and jewelry are at risk. However, some important sectors will not be subject to US tariffs. For example, imports of electronic goods will be exempt, protecting for the time being Apple's significant new manufacturing spending in India. Additionally, pharmaceutical exports will not be impacted for now. The economic impact may be cushioned by the fact that India's economy is largely driven by domestic demand rather than exports. So, shoring up consumer and business sentiment is key to faster growth. That is reflected in the government's plan to cut GST rates. Private consumption makes up about 60% of India's GDP. According to Citigroup, India's annual GDP growth is at a risk of a 0.6 to 0.8% decline. That's due to the combined 50% tariff. Still, the US is India's biggest export market, with shipments of $87.4 billion in 2024. However, that still amounts to only 2% of India's total GDP.
For latest news, download the WION app and subscribe to our YouTube channel.